Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, Ned Carson here with a breakdown of the action in today's session. But there's always something to talk about, Ed, even on a day that's a little quieter than what we've seen previously.
Yeah, we saw some action. It was like the Nasdaq, held relatively well today, even though it gave up some ground. And investors still have to be cautious and careful in this market. Schlumberger and Albemarle are a couple examples of good stocks that you don't want to fall in the trap of buying extended. And meanwhile, ADM cleared an early entry today.
Okay, well, we will review those three stocks for everyone. But first, let's analyze the major indexes in a little bit more detail here. So we have a chart of the NASDAQ pulled up. And like you said, we held today. Looks like some support right around that 21-day moving average, Ed. So what's your assessment of where we're at?
Yeah, and we closed down 0.4, so it wasn't the greatest close. But really, after last week's big move, it's not a surprise to see a decline. Treasury yields rose quite a bit. So to see the market sort of hold up in those conditions, pretty positive. I don't think there weren't a whole lot of stocks to buy today, and the stock market didn't do anything dramatic one way or the other. So it wasn't necessarily a day to make a lot of moves. But I'd say this was a fairly constructive day. I mean, you're going to see a down day. Now, maybe we'll have a bunch of them. Today was constructive. Maybe it'll get deconstructive if we keep on falling. But today at least was a positive, I'd say a positive move overall.
And then the Nasdaq down about 0.4%, the S&P and Dow down about 0.6% each. And it looks like the Russell 2000 closed down about 0.8%. But after the end of last week, 2 strong days in a row, as you said. So kind of building off of your point of it being constructive, Ed, with those strong gains that we saw at the end of last week, does a pause here make sense? Give investors a little bit of time. Like if there aren't stocks to buy right now for some of those handles or setups or maybe recent breakouts that we saw last week, offer add-on buy points.
Yeah, I mean, that's the positive. It doesn't have to stop here. The 50-day line is a more obvious place, but it's not a surprise to see it test here after running up like it did. So it's normal, and it would be healthy. It would be a very positive thing, as you were suggesting there, to have some handles formed, because there aren't a whole lot of stocks in position. You have a bunch of stocks that were sort of getting extended, and then you have a bunch of stocks that are beaten down. So, we need some time to see some other names come up and set up and offer real buy points.
All right, well, let's also take a look at the S&P 500 to see where that is at in relation to its recent action. So above the 21-day, approaching the 50-day. This is a slightly delayed chart, as you mentioned, so down a little bit more by the end of the day. But all in all, it looks like about 3% or so to the 50-day line. So you're right, a couple more strong sessions, and who knows, that could be in play, but potential resistance there to keep an eye out for. Also, look at the Dow even closer to its 50-day line as well. So I guess that could be the next key level here to give us a little bit more of an indication of, is this a short-term rally that could last for a couple days or weeks, or does it have a little bit more to it?
Yeah, I mean, are we going to run out of steam here? Just because you get above the hurdle, it's like every time Harry Potter beats Voldemort, he had to beat him, kept on beating him again and again. There's so much overhead resistance. Getting above the 50-day line, there's still the 200-day line and those late March or early April highs, or then there's the all-time high. So getting above the 50-day line wouldn't be like, this is it, we've solved it. But that is a key point. It's like, can we get above that? Or, because this is one reason why you don't want to have your exposure too high right now, and might be ready to take partial profits and be ready to get out entirely if things turn against us, because it certainly could around the 50-day line or some of these other key levels.
And another factor to consider and discuss from today's session is what we saw with the price of oil. It looks like the USO ETF finishing flat for today after trying to break out to highs over its high from early March and backing off quite a bit by the end of the day.
Yeah, there was interesting news going on. It was rallying early on because of EU is basically going to do sort of a quasi import ban on Russian oil to a great extent. China's easing its lockdown, so a lot of positives there. But then there was a report in the Wall Street Journal saying that OPEC basically might take steps to increase production more. I mean, it gets a little convoluted, and it was just a report, but that helped wipe out the gains in crude and actually fell a little bit, went below $115. It had actually gotten above 119. So, it was just one day, but yeah, saw that come off, and obviously oil stocks came off as well.
Yeah, and it looks like for this fund, a lot of the trading action happening around this 82, 83 area, cleared that on Thursday, edging up again on Friday. So do you think that breaking out to the highest level in a couple of months here could still be in play, Ed?
Oh, absolutely. It just depends on the price of oil and what happens with those kind of things. But you could see how it was starting to get extended from the 50-day line. It's not that much of a surprise. You sort of drew that line, was a great early entry into this. And Schlumberger honestly will look a lot like that when we get to that. I mean, and which is no surprise, that'll look a lot like that. And it's just something that you don't want to fall in the trap, especially in this market of buying stocks that are extended, even if it's just from the 50-day line.
Such a good point there, Ed. And an interesting development with yields today. Looks like after that a multi-week pullback, a little bit of a bounce, and a way to also play this theme, Ed, which we talked about on IBD Live this morning.
Yeah, you can do that through TBT, and that's one way you can buy that. And yeah, that didn't come all the way to 50-day line, but the 10-year Treasury did, and nice bounce. Probably came right to the 10-week line. So it was a nice bounce here today. The fact that the stock market held up pretty well was nice. Now, that sometimes happens. It does, sometimes you have that one good day where the market or a few days will hold up when the yields rise. So it's not a guarantee that the market won't sell off, especially if Treasury yields rise again. But it's still, for today, the fact that the market didn't sell off that much was pretty positive.
Okay, well, let's take a look at those stocks as promised. So Schlumberger reversing lower, an outside day down about almost 5% here, Ed, after breaking out late last week. But an early entry could have been utilized here too with Schlumberger.
Yeah, and by the time this morning it got up to actually extended from the buy point, but right there was a really good spot. You could have done a trend line, but I think I like the sideways move better because there was volume on that day. Like, really, because the prior 2 days just sort of was getting above a downward sloping trend line, but that one was a nice day in volume. So got you in there in that regard, above 44.51. So that's just the way to play in this. And it was still relatively close to the 50-day line, not, it was getting up there. But buying it when it was high up in the buy zone is just been a tricky area. And there's nothing negative about this company. I mean, it's like it's doing good things. But as of Friday's close, it was over 15% above the 50-day line. That's getting up there. That's just, we talk about not wanting to buy when it's like 10% or so. And in this kind of market with volatility and such, don't really want to be, you want to probably pull that in even further and, run up a bunch of days. So seeing the oil prices come back wasn't that much of a surprise.
Yeah. So you're right. With it down almost 5% today, it's still 10% above the 50-day line. And we have been seeing a lot of turbulence around those more traditional buy points, even in stocks in leading groups. So just because you're buying an oil and gas stock, and oil and gas has been dominating all year long, some of the industry groups up huge this year, many of them, but that doesn't mean that it's all clear to buy breakouts and at the top of the buy zone, as you said, because a day like today could definitely shake you out.
Yeah, and it's just a shame to be in the right sector in the right stocks, but just be a little bit off in the timing. So you just have to be paying attention to that and then react to it. Though you can't. I mean, this could keep on falling if this thing. So you have to react to that, if your timing is off.
Right. And that's what I think is so cool about what we do on IBD Live is because we talk about all of these nuances every day, whether it's a draw the line move within the break, within the base rather, or clearing a declining tops trend line, tightening up for a couple of days and then moving out of recent highs, reversals off of the 21 day. I could go on and on, but just all of those little nuances to reading charts that we talk about. That's not necessarily going to make a trade work or not, but it can definitely give you a big edge.
Yeah, I really think it helps. And in a more volatile market like this, shorter term markets, I think it really helps out.
That's right. Okay, well, next on our list, let's take a look at Albemarle. This is a stock that we've been following closely. And speaking of a draw the line move, that's what we saw over this 250 area, even going back to a previous base here for Albemarle, which had a huge week last week, up almost 15% and pulling back today on some news.
Yeah, I mean, there was a report over the weekend where Goldman Sachs basically said, well, the price of lithium, which is around $60,000, figures it'll fall a little bit this year and go all the way down to 16,000 by end of 2023. I'm not sure all the reasons why, but in any case, it came back. Even if there wasn't any news, it's not that much of a surprise. After such a big week, I think I was reading something earlier that at least as of midday, this was the best performer in the S&P 500 this month. I mean, it was an enormous month. This was trading around it was basically from the bottom 185. It's basically where it was at the beginning of the month, and now that's where it is. So 4% decline isn't that really big of an issue, but this one cleared that 248, 250 level on Thursday, strong volume. Then it did it again on Friday. At that point, it was getting extended from that early entry. Now, maybe it'll form a handle here because this was normal action, really. I mean, I know there was a lot of volume, but it really wasn't bad. And as if you bought it around that 248, 250 level, there was no real reason to sell, especially since it bounced back, relatively quickly. But, that's why you don't want to be buying it up when it was up closer to 270 or so. Again, not necessarily that you had to sell it in that situation, but it was just getting way up there versus the 50-day line. It was already not cheap from the 50-day line, even on Thursday. So you just have to be, just keep that in mind. Don't, it's exciting. You want to get in these and we're talking about it. Other people are talking about it. Look at this hot stock. It's going to go. And maybe it will go. But, you're just leaving yourself open to a sell-off like this, even on a decent day. Imagine if the market falls 10% over the next 3 weeks. I mean, that's not going to be good for this or almost any other stock.
Yeah, well, we'll see if it can form a handle. I agree with you. I think that would be a great development. So we'll be on watch for that. And last but not least, let's check in on ADM, Archer Daniels Midland, getting back above its 50-day line. Some nice heavy volume here, Ed. And this is, first buying opportunity. To me, it seems like in a number of months here with this strong run that it had out of a big cup with handle towards the end of last year or, right at the very beginning of the year.
And I wish I knew more about this industry because it's interesting because a lot of crop futures were down very sharply today, like wheat and soybeans. But, this food processing firm, oilseed things, it did very well. Bunge did well. Fertilizer stocks did well. So there's obviously trends in here that I'm not familiar with. And this is where I'd like to know more. But nice action. You're absolutely right. It had been a big run and really didn't offer really good opportunities. Yeah, there's a couple 3 weeks tight, but this is a stock that does have a fair amount of them. So you can't get too excited over those. So this was an early entry. I believe this was added to Swing Trader. So a nice place to get into the stock or at least initiate a position to see where it can go from here. The volume really picked up. Really nice volume today. So something for that was working today for sure.
Yeah, another one to watch. All right, Ed. Well, thank you so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. And we will be joined by Arusha Pires for his once monthly appearance. That'll be happening tomorrow. So with the market at a key turning point, we'll have to see what's been on his radar, what stocks he's been nibbling at, taking pilot positions in, and what's closely on his radar for perhaps some industry rotation that we might see. Who knows? We'll get his thoughts tomorrow morning on IBD Live. Looking forward to that. We'll see you there, and we'll also see you tomorrow right here after the close.